Look at the freaking US dollar Mexican peso. You've got to be kidding me. Oh my God, you've got to be kidding me. What a great trader I am. I mean, considering the fact that I leveled my US dollar Mexican peso along at 1730 something, whatever, 1736 or whatever it was. I mean, how stupid am I? Holy cow, look at this freaking thing. You kidding me? Oh my Lord. Okay, so yeah, as you guys know, I draw all this stuff, ahead of when it happens, and of course I, wussied out and yeah, holy cow. Can you oh sorry, my screen is paused. Look at this damn thing. Holy cow. I mean, we're at the 38% retracement right now. And, as the market gets more risk averse, we're going to be cruising. As you guys know, I'm looking for a move up towards like 1850 so I can really short the hell hay out of it. But man, this thing is just screaming higher, and I'm so upset that I'm not even long, which is just mind-boggling to me. I mean, absolutely mind-boggling. All right. Anyway, we got a lot to do this morning. Let's go ahead and get started with our morning analysis. For those of you that are new, if you um, don't normally attend the Morning Edge, I want to welcome you. This is year number 14. I think I've been doing live non-farm payroll for a while, like 14 years. It's been a while. And most of you know that I will trade if I see some opportunities here, and it's a free webinar. Doesn't cost anything to be here. I don't stay here and pitch you all day on you got to buy this or whatever. It's just you guys come and go as you please. But somebody made a comment about they're busy making money and not tweeting earlier. It's true. I think a lot, most of the traders are busy, trading, and they're not really tweeting. I actually find a lot of time to tweet because, as most of you know, I'm not a very active day trader. I mean, of course, if I get, long or short something and I'm up 100 pips, and pretty quickly, I'm going to take profits. But mostly, I try to swing my positions around. I try to get in a position, stay in it for a few days, maybe even a week or two. Obviously, if you get an opportunity where something moves so aggressively intraday and you happen to be long or short and you're making money, you're going to take it. Like, if I, like, let's say we have a 250,000, number in the jobs number and the euro slumps to 113 and I'm short a little bit here at 114.30, I'm probably going to take that, 100 and some odd pips off the table, just because it's like, okay, well, thank you, but more than likely what I'm trying to do right now is, trying to stay short the euro probably till about 110 or 112 if I can get it, because I think the dollar reversal is so big this week. But anyway, yeah, we were having the discussion about, traders on Twitter. It's like, look, I don't, if I want to look for praise, I'm going to go on Facebook. I'm going to post pictures of my kids doing great things, and then I get a bunch of people going, oh, your kids are so great, oh, what a great life, yeah, blah blah blah. If that's what I really want to do, I don't go on Facebook. So it's not something I'll check it out like once every 2 or 3 weeks. My wife, on the other hand, well, that's just a different story. Okay, let's get started with the analysis. We got a lot of stuff to do, a lot of charts to get through. So as most of you know, I shorted a little bit of euro at 114.30, and actually 114.29. I'll tell you what my price at. My cost average is 114.29.9, and it's a quarter size position. Again, if you want to know why I'm doing it ahead of non-farm payroll, I've had a good week. I mean, I've made some money this week. I don't mind having a little bit of exposure. I do think that the euro will rally towards 115. I actually think that we're going to get a weak number, but I'm not a good NFP forecaster. I don't read palms. I'm not a gypsy, and I'm wrong at predicting stuff quite a bit. So especially when it comes to non-farm payroll and interest rate decisions, I'm like probably about as far off as you can get. But I actually think that I actually think that we are at full employment or near full employment. I do believe in that theory in the markets. Therefore, us staying at 200,000 jobs is um, pretty consistent with the economy, and I don't think the economy is necessarily losing steam. I just think the economy is going to start weakening soon as rates continue to tighten, physically, and even as by the Fed's hand, we're starting to see just tighter monetary conditions. I think that the jobs market is gonna let up a little bit at some point. So and we might be getting into that situation where we start seeing our normal job creation somewhere in the 150,000 mark. I think most people are expecting that too. So I think most traders are expecting a weak number today, for us to come in around 170, 180,000. I think that if there was a whisper number out there, that would be it. Now, if that's the case, I do believe that the euro dollar um, can bounce. Hey, whoever just sent me a Facebook request because it popped up on my phone, don't bother. No offense. I try to keep that part of my life private, so sorry. No offense. I hope no one takes offense to that. But thank you. It's very nice. All right. And I don't know why people can even find me on Facebook. I thought I set my settings 5 years ago to no one be able to see me, but anyway, whatever. Okay, so the euro dollar has popped up, and we're slowly making our way towards resistance. 114.65 has been pretty key support. I don't think that's gonna. I think that's gonna probably give us a little bit of a trouble of an issue as resistance, but 114.65 maybe up to 115, which is the 50% retracement right here. That's from the highs. Now, if you guys don't know why I was shorting the euro dollar earlier this week up here, is because we've had these lines drawn for months. Ever since we hit this peak right here, ever since we hit that peak, we took this what was the flag pattern, put it right here, and now you got what we call a pitchfork. We go boop, 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 boop. All right, so we just tagged that and 161% extension. And when I got up the other morning, I think it was Tuesday morning, I said, oh my God, we hit the 161% extension. We tested the underside of this trend line. Holy cow, oops, I didn't mean to do that. I just totally screwed that up. Let me copy, paste. Okay, so so when I got up, whatever it was, like Tuesday morning, I said, oh my God, we just tested the underside of that trend line. We hit the 161% extension. And I knew at that moment in time, that was it. That was it. And I shorted the euro earlier this week as a result. Now, the euro's been coming down, and we actually stopped as we thought we would stop right here at 113.40, which is the breakout point, which is also, it's coming into the 618. That's why I thought even a dip here. Let's get rid of that. We don't need that fib anymore. I thought even with a dip below this breakout point here, that we would be very well supported at 113.70. So you have to be careful on a break of new lows, and I'm going to write that number down today. I mean, we'd have to have 113.70. In my opinion, we're going to have a pretty damn strong number for us to crack that. Like if unemployment drops to 4.9%, or we create 230,000 jobs, which I don't think is going to be the case, but hell, you never know. Then, if we break through 113.70 here, that's a 618 retracement. I put an asterisk next to it because I think it's very important. We are in a range environment, okay, and my 2 cents for the FX and the euro is, and you guys heard me say this plenty of times this week, if we break through 116.15, we're going immediately, without much hesitation, we're going to see the 120s again. All right. In order for me to go from a range bias to a bullish bias, okay, we will have to go, I I don't know why the color didn't change, but anyway, we're going to have to break above this 116.15. And if we do, like I said, I'm going to be very bullish the euro. I'm going to automatically assume that we're going to see 120 and above. All right. But for right now, we're in a range, and you know, I would venture to guess that, you know, any rally now is going to find me and find other sellers, and you know, any dip back down towards 112, 110, you know, we're gonna find a lot of buyers as we come down towards, you know, the bottom end of this, you know, bottom end of this channel. So we're getting back towards the middle of this range, this upward sloping channel, in the middle of that pitchfork, if you will. All right. So again, any rally towards 115, especially if we see that this morning, I am going to be a seller up there. I will have an order ready, you know, right at non-farm payroll to be selling. That's where my focus is going to be today, guys. Just so you all know, I'm really focused more on the euro. As far as the cable goes, let's go take a look at the pound. Pound is so far off my radar right now that it's not even funny. As you guys know from earlier this week, for those of you that have been with us, I've been looking at not the inverted head and shoulder pattern, because the right shoulder lost its symmetry a couple of weeks back. So there's a lot of people that are in the markets right now that are like, oh, we have a big inverted head and shoulder pattern. You know what they found themselves on? The wrong side, because they've gotten really bullish with this inverted head and shoulder pattern, and probably are now witnessing that something that we've been seeing for the last 2 weeks, that it's really just a triangle pattern, and this triangle actually exceeded its, or hit its minimum expectation coming out of the triangle, and we tagged it and reversed and posted a false breakout and screwed a lot of people. All right, so now that we've done that this week, we had the bearish engulfing, you know, shooting star, whatever you want to call it, false breakout. Yeah, people are stuck on the wrong side. They got probably aggressively long, you know, above this 147. You know, then, you know, they just got sideswiped. You know, shorts probably got taken to the cleaners, all sorts. Oh my God, crude oil is absolutely crapping the bed right now. Are you guys watching crude? Oh my God, what happened there? Hello. Wow. I just noticed that crude is just dumping right now. I'll have to come back to the cable. I really have so much analysis we got to do, but I just have to take a real quick look. Wham. Remember, we have Canadian jobs report coming up too, so before you start trading the Canadian as a proxy, just be really careful with what you're seeing here. So crude just played whack-a-mole and probably are just taking stops below those lows. This is NFP jockeying for positions. That's what's happening right now. You probably just got a bunch of stops taken. People just got taken to the cleaners just now that were long crude ahead of NFP. That's all that is. Don't get too excited about that. All right, let's go back to the cable. So anyway, what do we do with the pound here? So if the pound, you know, can get some sort of rally here, let's go back to the hourly. If we can get some sort of rally here, I think if we can come back to this, you can see if you zoom in a little bit here, previous support, current resistance, any move up to 145.70. If you guys want to be a seller up there, that's probably not a bad place. 70, right? And we are in a range as well. Okay, now we're sitting on a 38% retracement. You see that there? See that there, right there? Right there, right there. Where? Right there. Right there, damn it. Okay, so we have a the 38% retracement, maybe even a little inverted head and shoulder pattern, but I wouldn't play that because it's really off of it's still in a somewhat sideways to uptrend. But that support should be pretty key. We wrote it down yesterday at 144.40. But I want to look below that real quick, 144.40. Let's say we have a strong jobs report. You know, where are we going to go? Because I would assume that there's, right at this point, there's a lot of buyers that have been coming in here, you know, trying to take this higher. they're all going to find themselves on the wrong side of the market if we break through the support. So I guess my gut instinct tells me that if we break through that 144.40, we're probably going to see 143 relatively quickly. You know, we got a lot of it looks like a pretty high traffic area around here, meaning that we spend a lot of time down there. So if we do, we'll probably do that. Um, so I'm actually going to write down just in case 143, just in case we get down there. Okay, just to have it on up on your radar there. Okay, let's take a look at the Swissy. Oh, excuse me. I was out later. I was out past my bedtime last night. I had one beer. It was a great beer, and it was Cinco de Mayo, so I felt it was. Oh, and we did have a shot. They had the Hornitas girls that were running around, and of course, they had to have a shot of tequila. It was really smooth tequila. You know that Hornitas is the tequila that has the worm. Like if you get the authentic stuff, it's got the worm at the bottom. hmm So smooth, so smooth. All right, here's the Swissy. Swissy's been unbelievably strong, and I really wussied out of this one. I bought it at like 95.50. I sold it at like 96, or no, I bought it like 95.20 or something, and then I sold it at 95.80, something like that. All I know is I got out like 200 pips early or 100 pips early, whatever. Really big hammer, really huge reversal off this trend line, which I still sometimes I'm amazed by how crappy I trade the markets. Like I knew this was such a big hammer, and I knew I should have just stayed long in the dollar Swiss, and I was just too quick to pull profits. Like I said, sometimes I'm just enamored with my own, you know, inability to trade the market. Sometimes I literally bought it. I like bought it here, and I sold it I sold it there. I bought it here, sold it there. I knew it was going up here, and I just didn't stick around. Anyway, now the question is, what do we do? What do we do here? This looks like it was a 78% retracement. No, not even. So the 4-hour relative strength is not quite overbought. So we could, huh? Hold on a sec. All right, whoops, I didn't want to do that. This should be really good resistance up here at 97 and a quarter. I'm going to write it down. Um, like I said, I'm not long. I would like to be long. The question is, where can you get long? I mean, this looks like we're just flagging here. That's all this is, right? I mean, we're just flagging. So let's say we have a bad number. So I would think that a dip back down towards 96 cents would be it. That would be the place that if I could get long the dollar Swiss today, it'll be right there. I just don't know if we're going to make it. I'm worried about the dollar just flying through resistance right now. That's what I'm mostly worried about. That's why I had to nibble on the euro just in case, because it's like I had a great week of trading. I have to have some sort of dollar exposure because the dollar is so strong right now. Because if it's a good number, the dollar's not gonna let you in. You guys all understand that, right? Like if we have a good number, the dollar is not it. The dollar has been relentless. So from after the reversal on Tuesday, this thing's been relentless. It's not letting shorts out. It's not letting you establish new longs. And the pain trade right now is the dollar going up. We have the least amount of dollar longs via the CFTC COT data, the Commitment of Traders data, we have the least amount of dollar longs since like 2014, since when the move started, basically. Like there are less dollar longs right now than there were down here, which leaves the dollar very vulnerable to a huge move from here. And that's why you're seeing this relentless bid in the dollar, because you can't get out. You can't get out of your shorts. You can't get into longs. The dollar's not pulling back, and that's why it's like any dip now, it's like I want to take advantage of it. Anyway, yeah, just some food for thought. Okay, dollar yen. All right, so here's the dollar yen. Now, as you guys know, we had this inverted head and shoulder pattern. I'm just going to leave it there for now, but I'm going to tell you guys this, and we're going to be looking at the dollar yen during non-farm payroll. We'll be looking at this intraday chart, at a 5-minute chart or a 1-minute chart when it happens. If we break through 107.70, that's my cue, just so you all know. If we break through 107.70, that is my cue that the dollar is going to take off. Because the dollar yen, so did you hear that? If we break above 107.60, 107.60, I just said 107.70, I meant 107.60. If we break through 107.60, that's my cue. You guys know that the dollar weakness had been predicated on the weakness of the dollar yen for the last couple of weeks. Because the dollar yen kept breaking down, as I'd warned you, every time the dollar, every time the dollar yen would break down, it just continued just putting down on downside pressure on the dollar index. If that dollar reverses, the dollar yen reverses, the dollar index is going to fly like it's nobody's business. And you guys already know, I mean, you guys already know that on a monthly basis, I had this yellow line drawn here for like the last 6 months, right there. I've been saying, when we were up here and we were, developing the head and shoulder pattern, I'm like, look, my head and shoulder pattern target's at 105. I'm expecting us to go back down to the breakdown point or breakout point. It's close to a 38% retracement. I've given you that same talk for the last 5-6 months. I've had that yellow line drawn there for like the last 6 months. We came within 8 pips of that this week. 8. I think 8. I'm 90% sure it was 8 pips. Within 8 pips. Yeah, the low was 105.54. This breakout point was 105.45. 43, 44, 105, 44, something like that. We came literally within just 8 pips of that. I'm not a dollar yen bull. I'm not convinced that that's the right trade. I am convinced that the dollar yen is going to go, we're eventually going to see 200 yen. I just don't know when it's going to turn. And I don't know if this is it, because I'm more scared that equity markets look so weak. But I'm telling you guys, if we crack this resistance here, we are going to squeeze. We're going to squeeze back to 110. And that is going to bring in all sorts of dollar strength. All sorts of dollar strength. So, okay, anyway, support. We're support. So support, this low, 106.30. I think it's the same numbers we wrote down yesterday. 106.30. And this is still bearish, just so you all know. We are still in a bearish trend. If we break above 107.60 today, I'll also put it back in a neutral trend, okay? All right, let's go to, what time do we got? Damn, running short on time. Let me do the Canadian really quick. I don't want to do it quickly because we have Canadian jobs report today too. All right, I'll be back in a few minutes. Don't go anywhere. When I come back, I'm going to go grab some coffee. When I get back, we're going to cruise through the Canadian, Kiwi, Aussie, dollar index, peso, Norwegian krona, Swedish krona. Don't go anywhere. Be back in a few. Thanks everybody for being here. Happy Friday, TGIF. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Hey, I have to read this because this is really nice. Two comments. One came from Michael W. He goes, "Good morning, Blake. I am guilty as charged. I follow you on Twitter as well as the Morning Edge. I simply am not a tweeter myself. I thank you many times online, as I believe many of your followers have. Your selfless help and guidance is invaluable. You're the best out there, and I've been trading FX since Wise Trade released Forex made easy at WiseFest. Thank you." That was really nice, Michael. You are old school, buddy, by the way. Arthur says, Arthur R., he says, read this aloud or not. "Blake, you are so right. I've made good money from your advice and education, and I've never said thank you. You mentioned yesterday that you won't be doing the Morning Edge forever, so I'm thankful for every day you and Paul and Kip are on. There are a lot of traders like me who are thankful, but haven't had the good grace to say so. So thanks." Thanks, Arthur. I appreciate that. That's really, really nice comments. And I give you the guys the warning. I'm not going to be doing the Morning Edge forever. It's not because I'm trying to scare you or anything, or because I have plans next week to leave. Nothing like that. It's just I want you here sucking up the knowledge versus kicking your feet on the desk and saying, "Hey, when's Blake getting in the euro?" Or because it doesn't really matter. It's because that's what I'm doing. It doesn't matter. It shouldn't matter to you. I mean, if you respect what I do, great. You can say, "Okay, well, Blake's buying the euro or selling the euro here. Great. I wonder what he's thinking." But hopefully you're understanding the process and the mindset and what's going through my head as the markets are moving. All right, listen, we got a half an hour. We got to get moving and grooving. So let's go over to the dollar Canadian. So here's the CAD. Now we do have Canadian jobs today, and this could be a double whammy for the CAD. I mean, the Canadian, if we have a strong jobs report in the U.S. and a weak Canadian jobs report, we could be trading well above 130 today. Especially with crude oil so weak. But right now, obviously, we are struggling as we come up to some resistance here up towards 129. So 129 is obviously a little bit of a problem area for the Canadian. Now, I'm going to delete this from yesterday. We obviously never got the dip down to 38% retracement. I think if we do, this is the place that I personally would love to be long the dollar Canadian. Okay, I'd love to be long the dollar Canadian down here at 127.50, maybe down to 127.30. Okay, so if we have a weak US number and a strong Canadian number, that would be possible. And frankly, I would love to buy the dollar Canadian down here at 127.30. Not 127.50, because this is where I was talking to you guys yesterday about that strategy that let it crack through that support, be on the other side of it next to that fib level, and see if you can pick it up at 127.30. Now the flip side is if we break through 129, there's not going to be much stopping it. I'm saying that because if you're short and we crack through 129, you are going to get squeezed. And we have gone from a bearish trend to a range because of the descending wedge of breakout. This is a massive breakout, guys, and I'm just utterly sick at myself for not being long the dollar Canadian right now. And I really want to buy a dip, and I'm just hoping that we get a dip today. Okay. All right. Let's see here. That's the dollar Canadian, dollar Swiss, dollar Canadian, Kiwi. Okay, so here's the Kiwi. Kiwi got hit, obviously, due to the RBA monetary policy report last night. The dovish RBA has put a dovish spin on the Kiwi. If you guys haven't noticed already, this is a bearish flag pattern. I don't know where it starts. I'm assuming here. Okay. This is a flag pennant, whatever you want to call it. It's bearish. And so when you start looking at continuation of this bad boy, it takes you well below these lows here. And we have a double top set up. Oops. So you can, and this is roughly, I'm just giving you rough targets here. So, the flag actually points towards 67 cents. And this double top if it plays out. I mean, we're talking 66 cents, and we're coming out of an up channel anyway, so that's going to be really bearish if we break through 68 cents today. And we're only 40 pips away. So if we have a strong number and we crack that, good night. See you in the morning. Take 2 aspirin. Call me. Okay. So, not looking good. Aussie. And we are in a range, right? Oh, wait. I got to figure out where resistance is. Sorry, got so excited about that one. I don't even know where resistance is right now. So where's resistance? It's a lot of clutter here. Let me get rid of this because you guys have seen it. Now I don't have to get rid of that. So we'll have to redraw that tomorrow or on Monday. Okay. Resistance is at 69 cents. Got it. Got it. Good. All right, let's go over the Aussie. Well, that wasn't happening. This Aussie's got, we were thinking, man, that could be an inverted head and shoulder pattern so we can get short up here. Yeah, that didn't happen. Thanks, RBA. Appreciate it. Really looking forward to shorting the Aussie higher, but obviously that's not going to happen. So we got this head and shoulder pattern. It's playing. That means it guides us down to. So basically, I'm going to have to stay bearish until we get to about 71 and a quarter. Which looks like it represents, no, it's past the 618. Okay. So the 50% retracement comes in here at 73.28, which is 73.30, which is right there. 72 cents is the 618. I don't think we're going to see that today. I may be wrong, but I don't think we're going to get all the way down there. 73.60, we're at, or excuse me, 72.60 is this resistance here. I mean, okay, I will tell you that 74.80. If I get an opportunity to short this thing at 74.80, I'm going to take it. Because that was the breakdown point, right? We're in a range, guys. Big, freaking, nasty, gnarly range. This move right here in the Aussie, just so you know, feels very similar to that move, which feels very similar to that move, which feels very similar to that move, right there. Similar to that move, similar to this move, similar to this move, and to me it looks like we're just going to roll over and attack the 68 cent level at some point again. But that's just me. And then, you look at copper, it's like, ugh. Okay. What the hell? Got a mosquito flying around in here. Ah! Zika! Get the Zika away from me. Fortunately, I'm not pregnant. It's good news. Well, at least I don't think I'm pregnant. Although sometimes if I look at my gut, I think that I'm borderline. Maybe I do have something growing in me, but I'm not too sure. I don't want to write down 73 and a quarter because That's just too close. I mean, I'm gonna write down 7260. 7260. 7260. That's that. Okay, dollar index. So like I said, the dollar index is it's just not letting it's not letting you out. If you're short, you're having a hard time right now, and you're getting this trade shoved so far up your rear end you don't even know what to do with it. I mean that's the problem with the dollar. And if you want to get long, it's not letting you in. That's the other problem, right? So right now the dollar index, any move down to 3730 is, this is obviously right through here. You can see that spike right there, but okay, 93.35. Okay, resistance. I mean, obviously if we break through 93.85, we're just going to continue to squeeze. Hold on, let me try one last thing here. This is the problem with the dollar. It's the biggest problem with the dollar right now. Is like it's just not letting you in. Had such a massive reversal on Tuesday. If you're getting squeezed, you don't know what to do, and if you're long, you're sitting there going. I was talking to this trader. I was talking to one of my trader buddies just the other day. He goes, hey man, you long the dollar Canadian? I'm like, I just got out. I go, I'm gonna rebuy it at 126, or I'm gonna have to buy it at 127.50. And here we are at 128.90, and I'm still not long. I can't get in. You know what I mean? It's just not letting you in. That's it. That's plain and simple. All right. So the 618 is just above the highs at 93.95. So we have to be careful with that. And if we close at our highs this week on the dollar index, just realize that we're going to have a massive, massive bullish hammer this week. If we close at our highs, that is, and this could be the low of the year right here. If we have a strong jobs report, and then our economic data starts to improve, going into the summer, and then the Fed starts raising rates, whether it's in June, July, or September, whatever, this could literally be the low of the year. If you take us out to November, we could be way up here, threatening 100, a breakout above 100. False breakdown below the lows, big spike, big hammer. I mean, it could really be the low of the year. I have to, I can't ignore what I'm seeing there. All right, gosh, I'm running low on time. Okay, let's go over the peso really quick. Here is Le Peso. We're at 18. Yeah, that's a 38% retracement. If we break 18, well, where are we going? We're going to really start squeezing because, and I know I've expressed this to you guys so many times, but I'm going to do it again. I am so excited to short the dollar peso at 18.50. I can't even tell you how excited that makes me. Like in the next couple of months, maybe even the next couple of weeks, who knows? I am so excited to short it up here, but I really think that we're going up there. So what does that mean in the near term? Well, that means in the near term you better get out of the way, especially if it breaks 18. I mean, this is like the Canadian. It's like the relentless bid. It's like, holy cow! When I looked at the dollar Mexican peso this morning, I'm like, I cannot believe we're at 18, and I called it, and I'm not in it, and that's the most frustrating thing. It's like, dude, I know we're going here. Why am I not long? And I can't get in because every time I turn around, things up another 500 pips. It's like, okay, here comes the dip. Great. Then and I look away, and then it's like, whoop, we're right up another 500 pips. It's like, holy crap, that just happened. It's like, oh, here comes the dip, and then whoop, right back up again. Oh, here comes the dip, whoop, right back. It's like it does it every time. It's just not letting you in, and that's the thing. That's the point I'm trying to make here with the dollar pairs. Norwegian krona. How squeezy does this look? How squeezy, whoops, how squeezy, nice and cheesy does this thing look? We've been locked in a down channel for the entire, excuse me, for the entire year. I don't even know what I got drawn here, but I'm just removing it all. We've been locked in this down channel literally the entire year. And we are threatening to break out. I mean, if we break through this 820 or what, I'm gonna figure out what the number is, but we break through that, we're gonna see 840 pretty quick. The neckline of the head and shoulder pattern. You know, you have weak crude oil, throw that on top of the fire, and then you got a strong dollar. We're gonna be sitting up here soon. So let's figure out where this resistance is today. 'Cause obviously it's where we're at right now, but I got to figure out why. Give me the why. Give me the why. That looks like it's an 88% retracement of this. Pretty damn close. From the shoulder, I don't see anything. From the highs, oh, that's it. Well, there you go. That's a 24% retracement right there. And we've stopped. So if we break through 825, this thing's gone. Oh, shoot. I didn't get the peso dip. Oh, you know what? Here, I can do that for you really quick. Most of you already know where this is. 1747. Okay. If it dips to 1750, I'm a buyer down there in the peso. 825. And support is obviously down here. Look at all these spikes down here, right through here. Huge support down here. 810, 825. Okay. 8.100, 8.25. This is a range. This is a range too. Threatening to turn bullish here on the dollar Norwegian krona. I mean, and just so you all know, in this U.S. dollar Norwegian krona, go look at that weekly chart and tell me you're bearish. That's a really, really strong uptrend. And all this dollar weakness that we've seen, that's all that we've gotten out of the U.S. dollar Norwegian krona. That's it. So if crude oil is heading back to, like, let's say crude oil is heading back to 35 bucks, the U.S. dollar Norwegian krona is probably heading back to 870. I'm just, you know, I'm not giving you any specific numbers. I'm just speaking my mind right now. U.S. dollar Swedish krona. Yeah, if this is a weekly flag pattern, and you're short the U.S. dollar Swedish krona, you got problems. That is a freaking huge hammer. Huge. This is one of those other. I had a bid in at 805 overnight. I had to cancel it, obviously. It's just like, wow, please stop so I can buy you, right? It's just, it won't stop. Look at it, relentless. That's a grind. Like it won't dip. Like it won't dip to give us an entry. This is the same thing though, right? 805 or 803 and then 818. Okay. Breaks above 818 and then it's gone. Then you just have to start chasing because, and I don't even like to chase. You guys know I don't do that. What did I write down? What were we saying? 803? Okay. All right, guys, your bias chart's done. Take a picture. Take a picture. It lasts longer. All right. We have 10 minutes till non-farm payroll. I'm not gonna. You guys have been giving me a lot of comments. If you guys don't know, you can use the Q&A panel and ask me questions.